of numbers. We are now joined by the Managing Director of the company, Mr. Gupta, who is with us to take us through the performance this time round. Sir, Mr. Gupta, thank you very much for taking the time out. Your assets under management growth has actually been fairly strong at around 53% on a year-on-year basis. Could you just take us through details on how this growth has come through for you all this quarter?
Primarily, this growth is driven by retail loans, and we continue to have a very strong retail story, and 85% of our portfolio even on 31st of December 2016 was all about retail. So, the main growth came from retail housing finance.
Okay, retail housing finance is where the growth has come in from when you talk about assets under management. But Mr. Gupta, the other parameter, loan mix, has also remained quite stable. Any changes seen in that?
Okay, now the mix has not changed, and that is what I keep saying from the last 24 quarters. So on the portfolio, 61% is pure retail housing loans, about 29% is LAP, LRD and corporate term loans, and remaining 11% is construction finance.
Okay, fair enough. The other parameter, of course, were your net interest margins, which stood at around 2.83% in Q3. Banks have cut rates. Any guidance in terms of where the net interest margins could going forward, possibly be for the company?
Yeah, so one is that our margins will remain in the range between 2.10 to 2.15 because, of our product mix that we have decided to keep on doing it. And as I explained on the portfolio also. And considering that banks have cut down their MCLRs by about 90 bips to about 100 bips, well, even our cost of funds, marginal cost of funds have come down. And we don't sell our loans at the bottom of the rack rates, we are somewhere mid. So today, for example, when we were to sell our housing loans to incremental customers, it comes at about 875 to 880 rather than 835 to 850 of the banks. And we are able to get quite a good traction with our new customers.
Okay, fair enough. Sir, the gross NPA is very, very stable sequentially, but it's risen. It's at 0.37% versus around 0.26% on a sequential basis. Could you provide more color in terms of the gross NPA situation?
Okay. One is I would like to, put to rest all speculation on the wholesale book. As of 31st December 2016, there is a zero NPA on the wholesale book. Now on the retail book, between quarter 2 and quarter 3, it is always a strategic sort of a move of all the lending institutions to make forward flows in quarter 2 so that in quarter 3 we can enforce legal actions under the SARFAESI Act and get our portfolio cured. So every year for most of the lender community, you will see that quarter 3 NPA figures are higher than quarter 2 figures. So that's normal. If you were to compare our quarter 3 of this year vis-a-vis quarter 3 of the previous year, the gross NPAs have gone up by 2 basis points, taking into account the 60-day grace which National Housing Bank has given us to recognize substandard assets. But if we were to even shave off that 60 days grace, our gross NPAs will be at about 0.43%, which is a very, very healthy portfolio quality.
Okay, all right, so we're going to leave it on that note. Thank you very much for joining in and speaking with us. So that's PNB Housing Finance, very, very steady set of numbers this quarter. That stock is reacting positively to what we have seen in terms of an NII growth of around 41% year-on-year, net profit growth of around 53%. The gross NPLs in the wholesale book are absolutely zero at this point in time as per the company, and the net interest margins also stood steady at around 2.83% in Q3, and this compares to 2.73% that they did in the first half of FY17. So good performance which really came in for PNB Housing.